Okay, looks like everything is all set. So this stream is going to be focusing on, we're going to do my routine and, one sec. So the routine, diving into stretching, sleep, and exercise overall, along with feeding the brain and belief in yourself, guided by a higher power. I don't want to say religion, but just a higher power. And after that, I'm going to do a breakdown of the monthly and weekly charts of the industries. So we'll get a good vibe of what's doing well in the market and what might be having a hard time right now. So most importantly with the routine, let's start with the sleep schedule. I think it's very, very important to get that 7 to 9 hours. Common education, but when you're young, you don't really focus on it. It seems like it's not important. Now that I'm deeper into my life, I'm 22 years old, I cannot function without that 7 to 9 hours of sleep. So I think as we grow up, it's super important to lay that foundation. Between the years of 18 and 25, that is when you decide your future. You're building that foundation, and through building the foundation, you set yourself up for a strong future. Getting that sleep, it determines your mood, it determines how you represent yourself, which is along with your mood, but there's no exception, there's no way to operate at 100% without getting the 7 to 9 hours of sleep. And it's when I made that choice to take care of myself by step number 1, getting that sleep, my whole life kind of began to change, and suddenly I had more energy to pursue actual passions like the market and education in all sorts of aspects, whether it's nutrition education, financial education, mindset education, or just real world economy type of education. You gotta set yourself up properly by fueling your body and your mind and your soul. So that is really the importance of getting that sleep. And it's mind-blowing how some people go through their lives on a wacky schedule. So for me, I wake up at 5:45 every morning, go to bed at 9:45 every night. I get 8 hours of sleep. It sets me up for success. Another thing is being awake early in the day. Everyone's different, but me personally, that's when I'm ready to go. That is when I want to accomplish and start my day, when I'm in control of the day. So I'll wake up and 5:45, pick up a book right at 6 a.m. From 6 a.m. to 7 a.m., just read. And that it's a good way to fall asleep, but it's a nice way to wake up as well. Start the morning with a book, do that for an hour. I feel like I'm getting ahead, because let's be honest, a lot of people don't read. And reading books, it sets you up for success. It makes you're absorbing knowledge rather than, most 22-year-olds are playing video games and doing stuff. I love video games, but I'm more focused on my future and securing that future. I'd much rather pick up a book in the morning, go to bed at 9:45, wake up at 5:45, rather than playing video games till 12 at night type of thing. And then you're waking up late, not reading a book because you stayed up late. Everything is like energy and frequency. The more you take care of yourself, the more you set yourself up for success, things are going to work for you. They really are. So I think I kind of beat the fucking stone with that sleep routine. But next, for any athlete, for any person who considers themselves active and participates in activities, whether it's in nature, weightlifting, jump rope, any sort of physical exercise, I'm 22. You gotta stretch. Like, I feel the difference. It's a huge difference. When you loosen up and stretch properly, you, number one, prevent yourself from injuring. And that's the biggest thing. We don't want injuries. So stretch, and it's nice to have different ways to work out. You don't always have to lift weights. You don't always have to box. You don't always have to kayak. By having a couple different things, you add that stretching into the mix, you create a nice, well-rounded, diverse routine. And I really want to fucking beat the nail on the routine, because for me personally, that's what is setting me up for success and keeping my life going the right way. I feel for so long, the routine was non-existent. Had no routine, was just kind of moseying through life, and I was unhappy, very unhappy and directionless. Once I created the routine, and the routine was a bipartisan of me loving the stock market, me pursuing greatness in the market, and being a student at all times. I said, what are some other things I can improve upon in my life? That's where the routine came in. That's where the stretching comes in. So by looking at yourself, and ask people, maybe it's your mom or your dad, your brother, ask them, hey, is there anything that you think I could really improve upon? Like, what could I do better? Is there any things that you just get annoyed that I do? And you ask those questions, you look for feedback, how to improve, be a student of this world. And if you have that mindset, the always be learning mindset, this world is yours. You can do anything you want. But first, it comes that mindset, that routine, that commitment to your passion to improve consistently. So I talk a little bit about stretching. Let's get into exercise in general. The importance of exercise, it's obvious. When I was maybe 10 years old, 12 years old, 15 years old, I swear, the amount of people that I saw that were skinny, it was very common. And I love everyone. I have zero judgment in my heart. But it hurts me to see the amount of, I don't want to label them obese, but the amount of people who are out of shape nowadays is astronomical. And there's a reason for that. Number one, it's a lack of exercise. But number two, it's the amount of processed foods and the lack of education on nutrition. So what could you do for yourself today to put yourself one step ahead to set tomorrow up for success? I would say get 2 workouts in. 2 workouts of your quality. Whether, if you're just starting, don't compare yourself to someone who's been doing this for years. And if you've been doing it for years, keep improving step by step. I like to do 2 45-minute workouts. And one of these workouts must be outside. The fresh air, the nature, the ability to be unplugged, have no phone on you or just in your pocket, just in case a bear attacks you or something. One time I was walking, saw a bear. Like, I don't want to be at the victim of what the bear chooses to do. If it comes at me, I at the very least have a phone to call someone, or while I'm running away, make that call. Hey, I need help, something like that. But my point is, get that nature time, get the fresh air, get off social media, take the earbuds out, and just enjoy the birds. Listen to the leaves flowing in the wind. There's so much to be appreciated. And I know for a fact by how I feel personally. When I get that nature time, that fresh air, my whole mood, my whole vibe, my whole day changes. So be sure that you're getting that nature time, because it's going to make a huge difference in how you feel. And next, whether it's 2 workouts outside or just 1 outside, you need to do 2 workouts per day that are not consecutive. So, do 45 minutes. Me personally, I'll do my first 45, my nature 45, 7 a.m. to 7:45. And, then after that, I go through my training routine, and maybe midday, I'll go to the gym or do some boxing. It's always different. You got to keep things fluctuating. You don't want to get a boring routine. Keep yourself busy, keep yourself active, and be sure that you're not doing the same thing every fucking day. Because eventually, if you're doing the same thing every day, you're going to get sick of it. But last thing on the routine and the health. Freaking feed the brain with good things. By good things, I love books. I didn't read books in high school or middle school. I really consider myself a lackluster student. But once you find a passion, for me the financial markets, then reading becomes very intriguing, because when you're opening that book each day, that intuition, that you're grabbing knowledge, you're improving your mind in the way that you think. Read books. Whether it's Reminiscences of a Stock Operator, or a book by Jesse Livermore, or Mark Minervini, those are all very amazing financial books. I just ordered 15 books within the past 2 days. I am ready. I am determined to continue my education. There's no stopping for me. I'm going to keep reading, keep learning, and I think that's the mindset you need to become the best trader you can possibly be. Trading is always going to require you to be adapting, to continuously learn and apply new rules, adapt, put in new systems. It's important. You can't be a one-trick pony. Let's stay diverse, let's stay unique, and keep changing. So now I think it's time we're going to go through the monthly and weekly charts of the indexes, I correct myself. I mean the industries. A bunch of good, important industries kind of give us a vibe and a feel for how the market's doing. So give me 1 second while I figure this shit out. Is that not working? 1 second. 1 second. Now there we go. Okay, we're rolling. Sweet. So first we got the oil refiners, and this is the monthly chart on the left, weekly chart on the right. It's truly important to have a longer term view rather than don't trade in a vacuum. If I were to look at the hourly and the daily of all these stocks, it really wouldn't do me much, because I use these sectors, these industries, as like a vibe for the overall market. I'm not trading the oil refineries unless a beautiful monthly chart pattern, a long-term weekly or monthly chart pattern presents itself. So we got crack, which is the oil refiners, and on the monthly, a nice trend line, but we just had a rough month. We'll see what happens. I expect some sideways digestion, but there's nothing doing right here, nothing going on, no trade at all. Just something to pay attention to. PAL, which I believe is palladium. Look at this, where this thing has some room to the upside. We just broke out, and now the past couple months we've been slowing down, retesting the prior high of, what month was that? In March. So that's something to note. In March, when the coronavirus began, palladium had a nice move. Interesting. And then we break down to the weekly, and on the weekly, it kind of looks like a range. You got those 2 lines I just drew right there. I would not be shocked to just see some sideways digestion, and we'll see what happens, but for now, nothing doing. GDX, which is a gold, on the monthly, wow, this thing is pretty crazy. I think when we zoom in on the monthly, you get that trend line break of 1, 2, 3, 4, like 6 months. You see the past 6 months of that, I don't want to call it a bull flag, but that past 6 months of the downwards trend line, the volume has been abnormally low compared to the prior months of, past 5 years. Then we get into the weekly. Gold is quite interesting because the state of the market right now, we're in a weird state where it's just mandatory to keep eyes on gold. It's not primed for a move just yet, but with the past month, we had a bearish engulfing, so completely, but we're retesting that prior trend line. So truly, my expectations for gold, we digest further until that range of digestion is broken. XLE, which is the energy industry, wow, this thing is just a mess, absolute mess. Let me look on the weekly. Nothing going on with the energy industry. On the weekly, we had a bearish engulfing. Let's see if we hold the lower low of April right here. If we hold that, we could be looking to trend higher. But if we do take out that 47 mark, nothing looks good at all there. XLU, which I believe, one sec, utilities. This thing looks great on the monthly. So the utilities, that's the first thing we've looked at that really looks attractive. On the weekly, this trend line is very important. Trend lines are an amazing tool. And this, if it takes out that trend line, pulls back, retest that trend line as support, that looks great. So keep your eye on that XLU. SMH, which is the semis, on the monthly, look at that run. We had a monster run, and now we're digesting. Semis are just one of those future leading industries as technology evolves, and the more we get into the computer realm, the AI realm, these semiconductors are just going to go higher. I really don't see any negative fundamental case for the semis. And let's see if, you don't chase new highs, but you do pay attention to stocks that are making new highs. And the semiconductors are making new highs, so definitely worth keeping your eye on the semis and the XLU. We get into the Qs. Here's a little side note. Look at this monthly chart, and stocks can go higher, that Fed can bring stocks higher. But it is key to understand where we are in the context of the market. We go back, let me pull up the NASDAQ for a sec, which is the same thing as the Qs, I just prefer the NASDAQ. When you look at this, back in, okay, never mind. The ES does it better. The NASDAQ, I was quite surprised, but I couldn't find the corrections that I was looking for. On the ES, stocks move like this. They go up, they go down, preferably making higher highs and higher lows, correction. So you get a higher high, a higher low, a higher high, a higher low, a higher high, a higher low, a higher high. And that in general is how stocks move. So what conclusion could you grab from looking at that comparison to the current market conditions right now? And here's the thing though, the FED, as long as they continue to print money, and as long as the market continues to get new buyers, demand continues to come in, the market's going higher. But understand to be cautious. When the market's gone straight up, months and months and months in a row, you have to be worried of that 2000, that crash we had from right here, 2000 all the way down there, and then we had another one in 2008 all the way down there. Of course the market recovered, but who in their right minds wants to be purchasing up here? So if you can protect yourself by doing the research, looking at the monthly chart, at least have your fucking stop loss. You don't want to be a part, if we do lose steam, you don't want to be a part of the correction. Don't be a part of the correction. Sorry, side tangent, but when I saw this chart, I just had to go into that because anyone in their right mind that looks at a monthly chart understands where we are in the context of the overall market. IWO, I believe, yes. So this is the Russell 2000 growth. And that monthly chart does not look bad. Doesn't look bad at all. We zoom in, the bearish engulfing does look a little rough. But, you know, we could grab a trend line months in a row. And expectedly, I really wouldn't be shocked to see more sideways digestion. And eventually we break the trend line, but clearly we're not ready yet. So that's the case for the IWO. The diamonds, look at this. Sorry. We have a nice 3-month flag forming. I am interested to see what happens with the diamonds. When stocks consolidate sideways, it means there is still demand. People are very interested in the current prices, but there isn't enough demand to push it higher. So the case for the diamonds, the weekly, it could just continue sideways. That's what I'd be expecting. CGC, this is the marijuana ETF. This thing just, it does not look good. It doesn't look good at all. And I would have no business touching this thing until we get some tight ranges, some cleaner areas. Yeah, and the weekly just confirms that thought. Nothing good on that. IBB, what is this? IBB is the biotechnology ETF. So if you want to understand how the overall market is doing, I really suggest grabbing a bunch of these ETFs and scanning through them, because doing the research, looking at the charts, understanding the vibe, what the prices are telling you, it gives you an edge over people who haven't looked at the charts. So, this looks quite healthy. We broke a trend line, we retest the trend line on the monthly, and now we still look good. So keep your eye on the biotechs. Very interesting. Yeah, it isn't the cleanest pivot on the weekly, really isn't, but we'll see if it could tighten up. And above the 165 spot on the biotech ETF, that might be a good buy. Don't quote me on that. I'm not here to give suggestions, just reading charts, taking in data, and creating conclusions from data. SLX, which is the steel, yes, the steel ETF. Look at that. On the monthly, we had a monster break of that trend line. So we had an amazing trend right here. Check out the volume, abnormal volume. So steel is interesting. For an understatement, steel is interesting. We get into the weekly, and you know, what is that? We got a beautiful bull flag. So 1, 2, 3, 4, 5, 6, 7, 8. We got like 9 weeks tight. It could keep getting tighter. I'm fine with more consolidation, the better. We'll see what happens, but keep your eye on the steel ETF. This thing looks good. So far, what I'm loving is the XLU, SMH, I think IWO. Yes, IWO. Not loving it, but it is one of the more significant ones. The IBB and the SLX. Just a little recap. Let's continue. Jets, this thing looks like fucking trash. Absolute trash. And you know, I had this trend line because when you see a couple months in a row of sideways action, it gets interesting. But when we have a bearish engulfing and then we lose that support of the higher low, man, each candle tells a story. And the Jets right now, what the fuck it's telling me, it does not want to go higher. So, let it do its thing. The Jets is the airline ETF. I forgot to mention that. XLI is what the fuck is this? Industrials. Okay. We have a beautiful trend. You see, before we went higher right there, you had a couple months of consolidation. What do we got here? We got the same thing. Something I love to do is go back before the breakout, and you see what happened. And now look what we got here. Very similar. So, and then on the weekly, watch this XLI over the trend line. If it could take out that trend line, it might be ready to go higher. On the IWM, the Russell 2000, which is the small caps, that's a bearish engulfing on the monthly. Not good. But that doesn't mean that this low could just bounce. And if that is the case, and we consider continue this digestion sideways, IWM over that 234 spot, very interesting. IVW, it's the 500 growth. That tells you right here by looking at this, the growth stocks have been strong. There isn't much consolidation, and we are just pushing higher, in need of some major consolidation in the growth stocks. SPY, I feel like we already went through this, but that was just me being incorrect on my research. I did a thorough review of SPY earlier this morning, but clearly it's not morning right now. So, man, we have a beautiful trend, but look at this. 1, 2, 3, 4, 5. You get 6 months up with no consolidation. So what do we need? If we're not going to go lower, we at least need a little bit of digestion, consolidation, and holding of the current prices before we go higher. The market takes time, and 80% of your market profits are going to be generated through 20% of the year's trend. Truly, you want to be trading after points of consolidation. There is no business opening new trades when the market is extended or when things are loose and you have very large, very large ranges, daily ranges. You want to see tightening and prices battle before breaking to new highs. So the SPY, let's see, this yellow line right here we took out 1, 2, 3, 4, 5, 6, 7 weeks of consolidation. So interested to see how we act at that yellow line. XLRE is the home builders and very strong. Everyone, the market overall, the housing market, commodities, equities, everything is fucking up right now. So the home builders, a lot of people, this is speaking a little bit of the fundamentals, but so many people have been building homes lately, and you could tell that from the price of the chart. News moves markets, but the price doesn't lie. The tape doesn't lie. So get rid of your opinions, get rid of your bias, and formulate a strategy where you can listen to price and make money from following the trend of price. XLRE, it needs a little bit of digestion. It does look pretty good, very strong. Something to note is the declining of volume on the monthly. When we decline on volume, but we're still going higher, that's something to note. You usually need to see increasing volume when we're making higher highs. So XLRE does look good, the home builders, but notice, be cautious. XOP is oil and gas, and this thing looks beat up, really beat up. The gas refineries looked a little stronger than the oil and gas combined. Wood, which is lumber, yes, lumber ETF, Like, it makes sense. The home builders had a monster run, so the lumber has a monster run as well. And now I'm very interested to see if we hold that last high right here here, I'll just do a little circle. So I'm interested to see if we hold that high. We're very close to it. Cane, which is sugar. Very interesting on the volume profile. You see that enormous volume down here. You gotta note that, because when we get enormous volume compared to, look at that, 2012, 14, 15, even though we're downtrending, it's on not a lot of volume. And now, we don't catch bottoms, we don't pick bottoms, we just have a plan, a strategy, and we react due to our process and our strategy. But, man, this thing might be ready to just fucking break the trend line. There's not too many spots to draw it, but clearly we're below the key EMAs and we're in a downtrend. Cane might have made a bottom. We'll see. We need some digestion. Cane is sugar. Right? Yes. XHB. The home build ETF. Same thing as XLRE. Don't need to waste time on that. Healthcare equipment. Interesting industry. It's not the healthcare sector, but the healthcare equipment. And this, I'm not going to say it's a clean chart, but we have been making higher lows and higher highs for the most part. Not the cleanest of charts. We'll see what happens if we could break through those highs. XRT, which is retail. Retail, you know why retail has been so great? Because the government said to all these people, hey, have a bunch of free money. Go consume more. Consume. That is exactly why retail is doing good. And it looks, you could say we got a little ascending triangle. Patterns are great on the monthly, on the weekly. The thing is with patterns is a lot of people trade them in a vacuum. They'll look at a 5-minute or a 1 minute and make decisions in a complete vacuum. So you need to understand the monthly and the weekly. That is when patterns in volume contraction and everything of that sort matters. But yeah, if we could take out those highs on the XRT, this thing looks great. XLK, which, yes, it's technology. This is kind of like a Cathie Wood growth technology ETF. It looks exactly like the NASDAQ. We need a pullback to the yellow line. The 144 spot, just like on the NASDAQ, it's 14K. Crude. Pay attention to crude. Because last time we hit a 150 a barrel, it was 2008. That's when the markets crashed. If we get above the 80 spot, we have room to 100. And if we get above 100, this prior breakdown and breakout points are hidden areas of support and resistance. So if we could make a move from 80 to 100, consolidate, digest, man, I don't want more gas, more oil prices going up. But with Biden's agenda and the continuous cutting of supply, they are literally telling these oil refiners to just stop. So our supply of oil is getting lower. And what happens when supply gets lower? Prices go higher, especially if the demand continues. So keep your eye on oil. I don't want it to go higher, but I have a bad feeling it's going higher. We already went through SPX. TNX, this is the 10-year treasuries. Treasuries are a bit confusing to me, but you know what isn't confusing to me? This fucking downtrend. It's not something I would want to be long in. I'm a breakout trader. I do buy dips, but they have to be dips on the monthly and the weekly, dipping to a nice trend line. Or say we have formed the bottom on a trend line and now we're consolidating tightly and break out of that. I'll buy that. But TNX, 10-year treasuries, nothing good. VIX, this is just one of the weirder charts. VIX goes up when the market goes down. Volatility increases when the market goes down. When we sell like an elevator. When we go up like stairs. So, VIX is one of those ways that you can make money if you see that we lose the 50 EMA, we lose the 100 EMA, we're breaking down, we're making lower highs and lower lows. That is when it's not a bad idea to get long VIX. You can make some money on the downside, definitely. On the dollar, so we had this bounce off 90 and I was interested. I wanted to see how we react. Right now it looks like we're digesting, forming a bit of a flag on the weekly. Looks good. The dollar could definitely go higher. As long as we don't lose that 90 level, which as of now, we're looking healthy. No position, no breakout trade, but just something to know that the dollar is not getting destroyed just yet. Crypto has not taken over the world just yet. XLF, which is the financials, a cute little 2-month, 3-month bull flag, needs more time, but to note, XLF is definitely strong. JO, coffee. I would like to see coffee break through these highs. If we could take out those highs, you never chase extended names. Never, never, never. But if this thing gets tight around the highs, could be a valid breakout trade. You notice all the EMAs are below, which shows coffee is in a strong uptrend, even though we do have that resistance at the 50 mark. Don't sleep on the resistance. You always need to internalize where prior levels were. XLP, consumer staples, quite strong. I could see it breaking out very soon. We do need breakouts to have follow through on high volume. We need a healthy market to be taking breakouts. Right now, NASDAQ needs to pull back, needs to consolidate. ITB, which is home construction, we already went through a couple of those. Damn, I don't know. I'm honestly going to delete that because I have multiple home constructions on my industry watch list. I don't need to go through 3 of the same chart. This XLY, which is consumer discretion, it looks okay, but it's kind of like sloppy. There's nothing going on here until this thing gets tight, gets clean. No business. TLT, important to keep your eye on TLT. If we get over this line that I draw, on the monthly we had a pivot right here from back in August of 2020. We get over the 150 spot, wouldn't be shocked to see a move back up to 160 and higher. So TLT, that is the iShares Trust 20-year Treasury bonds. Okay. XLV, healthcare ETF, already went through a few of those. TAN is solar, a big industry in the near future. Solar is one of those, if the market crashes, you don't want to be in it on the way down, but solar will, almost without a doubt, with the political agenda, with the actual capabilities of the fundamentals, and the chart. So we got a bunch of things lining up for solar. If we could take out those highs of all the way back in 2010, look what happened. This ETF hit 300 back in the day. So a healthy action as of now, as of late. We'll see what happens, but solar, do not sleep on the solar. IGV, tech software, nothing going on. Had a nice bullish engulfing, but we just need to, honestly, on the weekly, it looks quite good. So we took out that old high and now we're retesting. We need to just digest, go sideways for a little bit, lose the volume, and once the big money institutions become interested, that's when you take advantage of it. You don't want to be trading without big money on your side. Even if you're a retail person, don't treat yourself like a retail guy. Treat yourself as a big businessman. Keep that mentality. Keep those rules and manage risk. Do everything as a professional would. I guarantee you, eventually, you'll become one of those professionals. So, USL is 12-month oil fund. It looks like trash, really, but this is a very nice level. Honestly, quite a clean level at that 28.75 spot. So USL over 28.75 has upside. Definitely has upside. Cow, which is the cattle, right? Yeah, cow is the cattle. Makes sense, right? If we could take out this monthly pivot right here, there's not much resistance. What I don't like is the EMAs are all above. That being said, could still present a good move. So don't sleep on cow. Definitely worth watching. Has potential. Bitcoin on the monthly needs more time. On the weekly, though, we do have a little wedge, and I tweeted about this today. If we lose the 28, the 29 level, there's no support. Nothing. Nada. Finito. No support. But if we do pop out of that wedge, there's a good amount of upside. So keep your eye on Bitcoin. You want to catch whether we go to the downside or the upside, because your grandma, your mom, your sister, everyone wants crypto nowadays. It's like the biggest trend. XLC, which is the communications, just a very clean uptrend. Man, this thing, I would love to see the communication sector go sideways, lose some volume a little bit. XME, we have the metals mining. This thing has amazing upside. All the EMAs are underneath. The monthly has proven to you multiple times. It hit 76, it hit 96. XME, the metal miners, has giant potential. A monster uptrend. We need some consolidation. Don't forget about this one. Ethereum, looking very similar to Bitcoin. The fundamentals are a bit different. Check out like the Macro Voices podcast, any financial podcast. My brain's going blank. I listen to so many different ones. Confessions of a Market Maker, Trend Following with Michael Covell. There are so many amazing podcasts. The Derivatives podcast, they speak on everything that I'm speaking on in this video. They go through the sectors, they put in the time scanning through charts, so they internalize what is going on within the market. We got XBI, which is, okay, I already went through that. BDCE. This is energy. I believe a heating oil ETF. I'm almost positive. But wow, nothing but a mess. You do see, though, multiple times at this level, we had... this is too messy of a chart for me. Too messy of a chart. PDBC. I don't even know what that is. That's coming off because I could not internalize what that was. USCI. This is the commodities basket. And man, this looks good. The commodities basket, we're on the weekly, 1, 2, 3, 4, 5, 6, 8 weeks tight. Looks good. Preferably continue to consolidate. And BAL, the last industry, which is cotton. This is probably the best chart we've looked at all day today. On the monthly, we're breaking out. On the weekly, amazing week on large volume. The thing is, with this thing, it only has a large volume week was 40,000 volume. So it has me a little confused. Like, there must not be too many big money, big institutional traders trading cotton, like back in the Jesse Livermore How to Trade Stocks or Reminiscences of a Stock Operator. There must not be too many big people trading cotton. Or you know what I just thought of? They just trade the futures. That's exactly what they do. They have enough money, I don't, to trade the futures. Eventually I will, but I'm at least tracking these stocks. I do go through the futures quite often, but this video has already been freaking what? Like 44 minutes, I think we'll call it here. Went through a bunch of industries and amazing charts. So if you learned anything, let me know. If you have any critiques, any comments at all, I'd love to hear them. And enjoy the weekend. Get that fresh air and treat the ones that you care about well. Be kind. Try to make a difference in this world. I truly think if you make yourself better, we're all better. So enjoy the night.